และในลำดับถัดไปนะครับขออนุญาตนำทุกท่านเข้าสู่งานเสวนาที่จะพูดถึงรูปแบบของซัพพลายเชนในอนาคตในการนำเทคโนโลยีนะครับมาประยุกต์ใช้ให้เกิดประสิทธิภาพและสะดวกมากขึ้นครับ
So if we are reaching the next session here and we're reaching lunch period as well, so we're going to skip the refreshment break and continue on to the next session. The topic will be the future supply chain financial solutions. We get a great honor from the associates of Baker and McKinsey Limited as attorneys at law to be the moderator for this session. Ladies and gentlemen, please welcome คุณกุลรัตน์ พงษ์สถาพรค่ะ
Ladies and gentlemen, now we are going to the next session, which is about supply chain finance, the less discussed topic in the FinTech landscape, but it's going to be a very interesting one. We got very good panelists with us here today. So let me talk a little bit about supply chain finance in today's world. So the World Bank Group estimates that more than half of the SMEs around the world lacks the access to the finance. And supply chain finance helps provide that access to affordable finance to the suppliers. And at the same time, provides the benefits to the buyers to better manage liquidity and utilize the working capital. In the recent years, FinTech providers have been a major disruptive force in the supply chain financing industry through the use of digital platforms and software-based services, such as dynamic discounting platform, e-invoicing platform, and so forth. This has allowed market players to rely less and less on the traditional tools, but more on the networks that help facilitate the transactions. The online software as a service-based networks provide simplified implementation and onboarding processes, improved digital interfaces that allow buyers and suppliers to interact with each other more easily, and can also integrate with the pre-existing in-house technology infrastructure. This enables buyers, suppliers to complete almost every step of the transactions centrally through the streamlined processes, which ultimately drive down the costs, reduce complexity, and therefore increase accessibility. When the network becomes even widely used, the network effect will also help allow for the extension deep down in the supply chain. And this emergence of technologies to connect counterparties has enabled the recent growth in the supply chain finance space in the recent years. And most importantly, these FinTech providers or solutions actually allow the long tail of the suppliers to be more involved. The less credible suppliers like SMEs, for example, who were neglected earlier, could be allowed to join the supply chain financing. However, when it comes to Thailand, you will notice that so far supply chain finance has been less of a discussion and surprisingly received little attention. And the market awareness of these innovative solutions are still relatively low. But still, many experts point that Asia would be the place where the growth of supply chain finance in the coming years will actually be one of the highest when the technology infrastructure and regulatory framework of the regions are more advanced and becomes more harmonized, and the awareness of the supply chain financing programs rises. Okay, so today, ladies and gentlemen, I'm very honored to be introducing you, our distinguished panelists who will be joining us today. Please welcome Mr. Nontawat Poomchusri, Country Managing Director for Accenture Thailand. Mr. Mohit Mehrotra, Co-Lead Partner, Monitor Deloitte APAC. Mr. Michael Sugirin, Managing Director and Global Head, Open Account Trade and Trade Implementation at Standard Chartered. Last but not least, Mr. Kanoksak Mokkamakkul, Executive Vice President and Head of Metropolitan Commercial Banking at Bangkok Bank. So thank you very much, everyone. Please have a seat. How's everyone feeling today?
Very good, thank you.
Okay, let us start with the very first question. Before we talk about the future supply chain finance, how about we talk about the traditional supply chain finance first? And the very first question I would probably direct it to Kun Kanoksak, who is from a commercial bank in Thailand, as to what is, in your opinion, the most challenging pain points right now for the SMEs when it comes to using traditional supply chain finance?
All right. Thanks, Kun Kullarat. And thanks to the Bank of Thailand for organizing this first FinTech event and focusing on SME, because SME are the smaller players, but very important to the economy, right? So, but they are facing a lot of challenges. So can I have the slide, please? Previous one. There you are. Okay. There you have the picture of our SME guy having some pain in the knee. And there are a lot of challenges facing the SME operators. And I'm going to talk mainly about the context of the supply chain financing, which is a very important portion of where SME players are operating. The first one is the lengthened working capital cycle. By nature, because they are the small player, they're buying raw materials from the big guys, and they are selling goods to the buyers who are big companies. So by definition, their bargaining power is very low. So their credit terms on both sides get lengthened, and they need financing, which comes to the next point. The access to financing for these SME players is not easy. By nature, they have no business plan, or if they have any, it's not very strong. Financial disclosure, in Thailand included, it's still not very good. Revenues per client, this is in terms of banking. When a bank wants to bank the smaller players, the revenues that the banks can make per each customer is not very large. So banks tend not to invest a lot of investment into how to make this possible. The next one is lack of collateral by definition as well. And lastly, it's that the credit risk for these SME players, it's not easy to assess. Besides that, when it comes to supply chain financing solution, SME operators are not necessarily familiar with the new technology, so they can't use the technology to make good use for them. Right? Which leads to the last point, that they need to resort to the traditional means, i.e. preparing the invoices, collecting all the purchase orders, and prepare all those documents to submit to the banks, a lot of pain. Okay, so these becomes the pain points of the SMEs. Now, traditional supply chain financing solution had been to address the chain of goods and services provided. And when we talk about supply chain, we normally think of the chain of goods and services being provided through a long chain of supply, right? So usually when banks look at this, we start from a strong sponsor in the middle. So these strong sponsor, for example, let's use an example of the automotive industry. So the sponsor would be the big auto company, like Toyota, BMW, right? Then the suppliers on the supply side would be the tier 1, tier 2, tier 3 companies providing the different parts and services, supplying to the automaker. And then the automaker would sell to the dealers who are the buyers. But usually banks would start with the sponsor, right? Now the sponsors, there are challenges with each element, right? The challenges with the sponsor is that they have multiple relationships with multiple banks, and they have their own ERP system, and banks have their own solution. So how do they integrate with these different solutions? It's not easy. And last point on the sponsor point is that they want to have as little recourse to them as possible. So they want to offload the receivables from their balance sheet, i.e. not taking the risk. While from the start, we say that supply chain financing can benefit people because we base it off the strong sponsor. But sponsors tend to say that, don't rely on me, right? On the dealer side, this is happening more compared to the supplier side because sponsor would like the banks to offload the risk to the receivables to the bank. But the dealers, they have varied credit standing. Some may be strong, some may not be strong. So lenders may have different appetite levels. And some may have informal channel. This is what I label carefully because some of them may not sell on the, well, they may have several books, let's say, right? And besides that, a dealer may buy from several buyers. So if buy from several sponsors. So if each sponsor have different system, then they have a headache. Going to the supplier side, usually the tier 1 suppliers are quite strong and big. So they don't need support. What we need to do is to go down to tier 2 or tier 3 operators. Then these would be the smaller guys who need support. But then in order to implement a system that cut across from the sponsor to tier 1 to various tier 2 operators and then down to tier 3 operators who actually need the financing, it's not easy. So these are the challenges faced by the current supply chain solution.
Wow, so that's very clear in terms of we actually have a lot of problems that we need to fix with the traditional supply chain financing. Michael, as a global bank, do you see similar problems or pain points in the traditional supply chain financing that needs to be addressed?
Yes, thank you. First of all, thank you for the Bank of Thailand to arranging this event. This is an absolute delight to be here on stage with such esteemed speakers. And I can definitely concur all what Bangkok Bank has just explained is exact the same problems that we're facing on the global stage as well. And not just within us, the Asian Pacific context, but if you look at what we have done in supply chain programs in Europe or the US, exactly the same issues, whether it comes through transparency, standardization, KYC, it really comes down to similar problems, right? The implementation of the supply chain programs, if you think about when this all started, right, 15, 20 years ago, all the technology we didn't have back then was really around e-enablement and trying to get programs on board and enrolled, right? But I think now, if you think about the sophistication of supply chain programs globally and what we see now in various countries, it's quite advanced actually, right? And I think if you think of some of the challenges in terms of overcoming KYC, credit, some of them actually have already been overcome. And if you think of large industries such as automotive space, if you think of FMCG, if you think of retail channels where you have large anchors or large sponsors, as you described, there are actually very good solutions out there in terms of overcoming that divide. And what I think is interesting that a lot of the supply chain programs from banks, bank-led programs, have focused very much on what we call sort of the post-invoice acceptance stage, where a supplier has issued an invoice and has shipped goods, and ultimately that invoice was accepted by the buyer and is ready for payment. It's a very, I wouldn't say not traditional, because it's really just 10 years ago where banks were still struggling with that concept and underwriting credit. But now it's a very accepted and very common way of providing supply chain finance. But if you think about where suppliers or SME suppliers in the context of the FinTech fair today, the problem is really much early in the stage, in the value chain. They have problems in the shipping, the transportation, the even sourcing of some key raw materials in order to produce the goods. They have problems with the pre-shipment side. And that's where I think a lot of banks are struggling now. How do I underwrite credit at the earliest stage with just a single PO. And as was already described, financial transparency is an issue, right? Underwriting, much lower credit risk is an issue. But there's now means technology, and I think what's interesting here with the whole FinTech aspect, there's definitely new ways of understanding credit and big data that ultimately could become the solution to this.
So you've mentioned that actually for supply chain financing in some parts of the world, in some markets, I think the level of the maturity of this industry is quite different across the world. So in certain markets like Thailand, for example, or in this region, Mohit, what is the structural problem that prevent alternative supply chain financing to really happen in real life? What is that structural problems of the ecosystem?
Right. I would distill this down to five big issues. I think some of them was touched upon by Michael, but let me just call these out as well. I think the first is transparency of flows. That's absolute challenge in terms of getting greater visibility so that you have greater confidence in funding that flow. The second is availability and authenticity of the data. If I look around the region, we don't have standards for invoices. And that's a big issue, especially when we look at some other parts of the world. There have been national e-invoicing standards in play. And then that's a big challenge, especially when you look through the invoices that come in different formats, different structure. Are they authentic, are they not? I think the third is governance in and off the banks. In terms of A, the regulatory obligations they need to go through, and B, how they're configured internally to cater to the flow that Michael alluded to. The classic example, does the client see one business card from the bank, or does he see 20 business cards from the bank? And at what stages does he see those 20 business cards? Number fourth is the constraint around talent. How many frontline bankers exist that can talk through an end-to-end ecosystem of that particular industry in the marketplace. And lastly, but very importantly, the proposition of the banks itself. Is it a B2B2C proposition or a B2B2E proposition and the various flavors around it? Are banks in the business of providing better, faster finance, or are they in the business of augmenting with better quality data so that they can address the core needs of the clients in that supply chain ecosystem? Those would be sort of the big five structural issues, I would imagine.
Thank you very much. So basically, you see the structural problems as transparency of the flow, especially of the data, and the authenticity of the data, as well as some talent constraints, as well as finding the right proposition within the banks themselves of how you look at the supply chain finance. So given all that, leading to Kun Nontawat here, what would be the important prerequisites of creating a solid fundamental basis for the alternative supply chain finance in the future?
Yes, as you hear from gentlemen on my right about challenges that SMEs and other stakeholders are facing today and moving on to the next generation of supply chain finance. One of the key things that I think it's the key prerequisite to that is the data and how to get it right. So there are many aspects when we talk about data, as Kun Mohit just mentioned about transparency around the data, the validity, and we talk about standardization and how to integrate the data. So there's a lot of things around data that we need to get right before moving to the next generation of supply chain finance. And if you look at why there are such challenges around data, one of the key things is because a lot of things are being done paper-based, right? And doing things on paper has been creating a lot of issues for us, from not only inefficiency, but also creating frauds and a lot of problems. So moving those data online or digitizing the supply chain process would be the key prerequisite to move to the future of supply chain finance. And if you look at the end-to-end supply chain today and where banks are playing, and we mainly see a lot of good solutions, as you already mentioned, really focusing on the bigger ones, right? The sponsors, the big manufacturers, or the big buyers. But end-to-end supply chain, there are a lot of parties there that are smaller ones from the supplier side or the retailer side, which is going to be a bit more challenging to try to move them online. But the good news is the way we see trend happening in the market today, the bigger players are trying to help their partners to move things online as well. So, big players, for example, if you look at FMCG industry, the big ones like Unilever, for example, are pushing their distributors and supplier online. In Accenture, we are involved in that activities as well. We have a solution called Newspage. Other people have similar solutions as well. And the primary reason of the bigger player pushing for that, it's mainly to have a better data for forecasting. But at the same time, having those data online will help, looking at the opportunity to expand supply chain finance as well, because data doesn't only tell us the ability to repay, which is the traditional way of using the data, but also data can tell us where the money is needed. So that's the way, I see it. Data, it's really the key thing moving forward.
So the very first step that we need to get it right. Michael, do you have anything to add on that?
Add to that. I think we all, as bankers, we love data as well, right? But the question is, do we know, as banks, do we know what to do with that data, right? As much as I love to get all the data in, at the end of the day, as a banker, we have to scan, we have to screen all that data, and have to make sure that we have no financial crime compliance within any of that data. Any red flags potentially turn up, right? But just to give some context, within Standard Chartered, we created this big, what we call ecosystem data lake, where we've put essentially all the various product lines data onto a single data storage, and to just look at, okay, can we identify trends, can we identify opportunities, and exactly to the point, is there any red flags in terms of delay payments and all that? But more going to the next stage is really, how do I use this data to then define a new risk framework, a new credit decisioning model to actually underwrite credit capacity for any corporate, whether it's a large or medium or small corporate, right? And that's not easy. And not easy because I think while we can define all the algorithms that we want, at the end of the day, if I have to speak to a regulator about a credit framework that is new and different, it's challenging. And I think every regulator has a different understanding on how to underwrite credit. And that's, I think, there's an opportunity. And I think the fintechs are showing us that there's a different way to underwrite credit, because they are tackling a space which is on the unbanked, where they don't have access to the banks, they don't have access to actually creating a financial statement, right? How do I bridge that gap? And there's actually some interesting ways, some innovative ideas where we've seen globally where that's being done.
So maybe we also need to rethink whether there needs to be regulatory responses to better support the creation and development of alternative supply chain finance, right? And moving forward, we've talked about what is the underlying problems within each of the jurisdiction, and I think it's very similar anywhere in the world. But if you look at the cross-border, because we have a lot of cross-border trades going on for Bangkok Bank, also with a lot of border trades with our neighboring countries, especially in the CLMV countries. Do you see any opportunities in whether the development of the alternative or future supply chain finance ecosystem in Thailand will actually have an impact in economic development within the CLMVT region as a whole?
Thank you. Slides. Oops. There we are. Yes, the opportunity for Thailand and CLMV is huge, right? Because we are sitting in this strategically located area where our neighboring countries are still growing very strongly at 6, 8, 10% GDP growth. And the trade between Thailand and CLMV is growing very fast. Our neighbors love our products. Right? They know all our brands and love our products. They understand our soap opera and all that, right? And the CLMV region as a whole has become a very important trade partner for Thailand. So the opportunity for Thailand, for Thai operators, for the country, if we can master this supply chain financing solution within the region, the opportunity is huge, right? But it's not easy. All the challenges that we talked about earlier about the supply chain financing, the traditional one, apply here as well, plus the additional challenges having to do with the cross-border trades, plus the countries that we are talking about have different stages of economic developments. Right? So there are issues with the different regulations in each country. There are issues with the payment system. Usually trade with these countries are not done by the traditional trade finance solution like LCs, because the banks in those countries are not very up to the global standard just yet. The currency exchange, the KYC, getting to know your trade partner, the credit risk of trading with these companies and counterparties in the new countries like these. These are all challenges. But luckily, Bangkok Bank has branches in all these countries, and we've been operating in those countries, so our team know the area, and if you want to talk to our relationship managers, you're very welcome.
Yes.
But yes, big opportunity, but still a lot of hurdles.
I see. So with these big opportunities, I think it's probably right to say that we could foresee a lot of more digitization or new form of supply chain financing coming into this region. With that, I understand that Accenture has been involved heavily with the supply chain management services. So what are the overall impacts brought about usually by the digitalization of the supply chain finance program? And for example, in terms of the management planning or the implementation costs, for example?
Yes, we've been running quite a number of supply chain BPO for clients, and recently we've been seeing trends, especially coming from the FinTechs and the tech player. And the way we see it, the technology would impact by expanding to new players. And when I say new players, we are referring to non-banks, because traditionally when we talk about supply chain finance, bank is at the heart of it, right? But with now technologies and platform, marketplace if you like, or peer-to-peer, this kind of innovation from FinTech companies are expanding the game to newer players. So if you look at, and this includes both the supplier-led and the buyers-led, right? You see different examples around the world and what people are doing. And I think there are some of the things that Standard Chartered Bank is also doing as well. Michael, you may want to touch on it later. But some of the things that we have seen going on around the world, for example, the receivable exchange, which basically allowed suppliers to expose their approved invoice to funders, which is not limited to banks, but it could be other people who are interested in making the investment into this. Or on the buyer's side, there are players like Prime Revenue, who is also doing similar thing for the buyer's side, where they can expose their approved invoice in order to help the suppliers without putting burden on their working capital. So we have seen that growing and becoming popular. But of course, it's back to the regulations of each market as well, where if this kind of marketplace would happen when it's going to happen in this particular part of the world.
So we've discussed some of the key concepts of the future supply chain financing, and the panelists have mentioned some of the initiatives or innovative solutions out there. But to really give a clearer picture to the audience, Michael, would you do us a favor by showing some of the initiatives or projects or services that you or together with third-party platforms are providing to your clients?
Sure. So I think we've realized within Standard Charter that at the end of the day, the bank-led platforms is a very challenging initiative from a scalability perspective, from getting a broad adoption approach. And I think the opportunity out there is really how do you partner and work very closely with third-party platforms that are out there. I think you mentioned Prime Revenue, some of the destination platforms that are out there. I'm giving just one example here, GT Nexus. GT Nexus is the old, I think maybe you remember, trade card platform, which is now under the Infor. And GT Nexus has, I think, close to 30,000 suppliers on their network. And they're focused primarily on the garment, footwear, apparel industry, and they essentially source and work very closely with procurement offices here in Asia and into the Western world and large buyers in the US, which just as Target, JCPenney, Walmarts of the world, right? And what we realized that it's going to be very difficult for us as a bank to continually outpace these platforms, because I think there's definitely a value that a platform, an aggregator provides. And I think the biggest value that these guys provide is really around understanding in terms of how a corporate supply chain really works, around the orchestration or the management of a purchase order, how an invoice gets issued and adjudicated, and how to track and have visibility on shipment, late shipment, short shipment, all that aspects. And at the end of the day, what the bank wants is there a match between a purchase order, an invoice, and a shipping note? So if that is achieved, and that's something that GT Nexus provides as a service, we are able to provide financing along the value chain, along the supply chain, and that ultimately is what the trigger we need in order to provide finance. So GT Nexus is one of the platforms where we work together with. They have, like I said, a very strong footprint within that particular space, but it doesn't preclude us from partnering with other platforms that are out there. And for example, I think the next one. Here's another platform which we are working on very closely with other banks, and I think that's the new norm also. I think 10, 15 years ago, we were in a space where banks were competing with banks, but these days we are actually collaborating and thinking, how can we actually, for our clients, think about more value-add solutions and work closely together with banks. And so we are part of, for example, the R3, the R3 platform in terms of how do you bring blockchain into the greater world. And Marco Polo is just another consortium which focuses really around a single platform that brings together purchase order, invoices, and settlement, and ensures and reduces complexity as well as reduces risk, and provides a single messaging platform between buyers and sellers to come together and really create that standardization that we are looking for. It's sort of the medium term what we're looking at, but we hope that we have initial proof of concept this year already. And as I said, this is sort of a consortium that we are working closely with other banks together.
I see. What is the percentage, if you would calculate for us a little bit, of using the traditional supply chain finance versus using these new fintech solutions nowadays, and what do you expect in the future?
Well, I think it's going to be balanced. I don't think one will rule all. I think there's going to be a balance, a healthy mix between a bank-led platform, between a GT Nexus or third-party type of platform, or the new consortium type of play. I think supply chain is not one size fits all, right? Supply chain from industry to industry, from FMCG, from tobacco to mining to automotive, it's a very complex play, right? And whether it's global, regional, and local, these industries are very different. And I think what's important to understand is that because of that complexity, not a single stakeholder can do everything. We need to find our value add, and we have to be very good at that. And I think that's the importance at the end. I think as a bank, we've been very good in the past about creating a solution and then trying to find the problem to fit that solution. It's, I think, more about really listening to your client and understanding the complexity of they face in their supply chain, reducing risk, reducing cost, right? Optimizing with their working capital, and then find a way, an opportunity based against your strength as a bank to provide that value add for our client. And I think, therefore, I think there's going to be, at the end of the day, bottom line, a balance between the local led supply chain finance solutions between the third party as well as the global solutions.
I see. And for within this region and particularly in Thailand, Mohit, do you see any other interesting fintech solutions out there, either by using new business models or new technologies that have been proven successful elsewhere that would probably be useful for Thailand to consider as well?
Yeah, I mean, if you look at the narrative and fast forward the play, clearly trade is going to get more and more digital. Clearly, governments are going to embark on more and more national trade platforms. Clearly, there's going to be more and more governments embarking on e-invoicing standards. And I think the choices, when you look around how players are moving in that direction, the choices people are making are really around three key choices here. The first is, am I going to be in the business of making banking invisible, or am I going to do banking for the invisible? And that has deep connotation in terms of how far do the chain do you get down to, or how much do you embed yourself in the chain? I think the second key choice businesses or banks are making, reflecting on some of these tech platforms, is, do I want the whole prize, or do I want, am I okay with part of the price, essentially driven by fear or greed? And that's the second key choice being made. And the third key choice here being, am I going to compete by delivering digital financial services solutions, or am I going to compete by delivering digital solutions? Going back to that data narrative, am I in the game of building data solutions, and not just to make my credit better, but actually monetize data and delivering a greater value add, because the pricing of finance solutions is anyway going to go, as with the transformation of the price-value equation, is going to go lower and lower. So those are sort of the three fundamental choices financial institutions, whether it's service providers, are making, whether it's the tech platforms, whether it's the fintech platforms, or whether it's some of the banks around the world. And I think that is the key choice as people build their narrative in a world which is going to be more digitized trade, in a world where there's going to be more e-invoicing standards, in a world there's going to have more and more national trade platforms.
I see. So it sounds like there will be a transition to a new era for supply chain finance, especially in this part of the world, including in Thailand very soon. So in preparation for that, Kun Nontawat, how do you see corporates, acting as buyers or SMEs as suppliers, to prepare themselves for this coming wave of new way of doing supply chain financing?
Yeah, we talk quite a bit about how we get different parties to work together and create an ecosystem, and how we integrate different part of the supply chain together and create the value. And I spoke earlier about getting the data right, and that the key part of having or being part of the ecosystem is the ability to leverage or monetize the data, or integrate the data with other parts of the supply chain, and to get ready for that. I think first thing is to look at this existing process and the way you do things within your organization, and ask yourself if you are ready to open up and integrate with the rest of the world and try to make use of that opportunity. Right? So, basically, in a small and medium enterprises, you start from looking at how you run your back-end process and system and how ready you are. Right? I'm not talking about asking everybody to invest in the big IT system in order to plug into an ecosystem when you want to, but there are so many choices these days in the market where you can subscribe into as a service provider and so on. So that would enable you to be, at least first of all, having your data ready on the digital format. And Kun Michael talked a lot about standardization and being able to integrate in a seamless way, and that is also the key thing. If you start looking at how you digitize your existing back-end process, right? That's a good starting point.
So it's likely that while there will be a lot of new players coming in, the banks themselves will remain probably one of the major players in the supply chain finance. So we've listened to Kun Nontawat talked about how the corporate themselves should prepare for the new era of supply chain financing. What about banks? With all these new players coming in as platform providers, or even sometimes as the funders or sponsors, as the funders themselves, how banks should be prepared to cope with these new challenges, or actually embrace the opportunities that come with it?
I think that's a very interesting question. So if you ask me about 10 years ago, then we probably say we'll compete head on with them, right? But I think in this day, we cannot afford that. With the governance lens, with the risk lens, it's very challenging. I think an absolutely important piece is to remember that innovation is here, what we all strive for, and creative ideas that we're looking for sponsoring. And so within StanChart, when it comes to innovation, there's sort of three key themes that we are looking at. First, we have what we call an accelerator lab, where we've created, I think the previous panel has talked about the sandbox idea, and I think a lot of regulators have put forward the sandbox environment. Within Standard Chartered, we have a sandbox environment in Singapore as well as in the US, where we run POCs with corporates and allow ideation to happen. I think that's important. Ideation is so critical these days. It's our way of listening better with our clients in terms of what they want and how they want ideas to get implemented. I think a lot of times we are challenged, as a bank, we are challenged with a lot of governance, a lot of compliance purview that makes ideation, creation, innovation very challenging. The second theme is around how we work and collaborate with fintechs, and we actually sponsor a couple of programs. One is, for example, the Supercharger FinTech program, which is a 12-week program where we mentor, we sort of incubate and help some of creative fintech ideas that are out there. I think one of them actually is here in the forum today and speaking later, which is KYC Chain, which has some very cool ideas in terms of how to speed up and reduce the complexity around KYC. So very, very cool stuff that they're doing. And so instead of trying to emulate what they're doing, we actually said, okay, why don't you come in and help us bridge or solve for a problem that we have internally. And so we are trying to incorporate them into our BAU process. And the third is, within Standard Chartered, we run a platform called SC Innovate, which is really an ideation really from the bottoms up, asking our own employees to come up with innovative ideas. What clients are stakeholders, internal stakeholders are asking for, and submitting these ideas to an internal platform and actually awarding that. And so really create this spirit of innovation within the platform, within our franchise, to really create a bit more nimbleness within the organization, but also to foster this openness, this aspect which I think fintechs do a very good job at.
I see. So there seems to be a trend of both cooperation with the fintech players as well as internal development within the banks themselves. For Bangkok Bank, I understand that there are quite a lot of initiatives in the fintech space as well. So if you would please share with the audience.
Yes, I just would like to add on what Michael said, that all the banks can't afford to be complacent anymore. We can't continue to do business the way we used to do. And we can't go it alone. So we need to collaborate with the people who are doing better value-add activities in their various respective specialization areas. So for Bangkok Bank, last year, for example, we hosted this InnoHub program, which is the first global accelerator program in Thailand. So we selected the 8 top FinTech companies to work with us for 3 months in Thailand to launch their service in Thailand. And 2 of them have to do with supply chain financing. One of them is called invoice interchange, which is invoice financing, and the other is called First Circle, which is a lending AI model. Right? So we need to work with them and collaborate with them. On the other hand, we need to work with other banks and try to come up with the new standards. The OUCP standard had been around for, I don't know, has it been a century or?
Something like that. Feels like it.
LC has been around for so long. So now we are working with other global banks and other regional banks on R3 project, which hopefully will evolve to become the new global standards for doing international trades, both in terms of LC type or open account type. Besides that, then we need to work with regulators as well. We are championing and supporting the Bank of Thailand initiative on the national e-payment system, which have a lot of initiatives that are coming out in Thailand, you would know, right? That's PromptPay and all the QR codes. So these help speed up and get everyone ready. These are all the activities, the various activities that we are doing apart from the in-house innovation.
So it seems like the banks are also very prepared for this new supply chain finance platform as well. So we're running out of time, so maybe I'll ask each of the panelists to help give you, some thoughts about what do you see supply chain finance in the future would be like? What would be the ideal world, or what would you expect to see in the future, and probably give some final comments on the supply chain finance topic. May I start with Kun Nontawat?
Sure. The way we see the pace and the way the industry is going, I think sooner or later we're going to see supply chain finance world becoming very open comparing to where it is today, where it is limited to some players like banks mainly. So that's the first thing we're going to see very soon. And of course, the world is being data driven, and and that's another key thing. And to be successful in this world, you cannot do it alone. Right? Being a part of the ecosystem and help to move the whole industry forward by working together among what you used to see as your competitors. I think that's the key. And a good example of that is what we have seen yesterday. I think some of you in this room were here yesterday afternoon, where there are 14 banks in Thailand announced the blockchain community initiative. And that's a good example of how the industry is transforming. We get different players, competitors together and try to do things differently, collaborating with not only banks, but also other people in the FinTech as well, for example. So be ready for that. That's how the world is going.
Mohit, your thoughts on this?
Yeah, I mean, I think just to add on to that, 2-3 things here. I think one, we got to quickly learn the difference between a partner, user, and a customer. I think banks have always grown up understanding what's a customer and how do I make money from the customer. But I think in the new world, it's very critical to differentiate between a user and a customer, and start thinking, can a customer be a partner or a partner be a customer? So I think that permutation combination between the 3 words is very critical. I think secondly, the role governments are going to play in this game is going to increase, especially if you look at what happened in Malaysia with the digital trade-free zone. There's a chance that if banks don't change their place, they might just end up as pipes, especially in a digitized trade world, and that's something to keep at the back of mind, because there are many people that can build pipes, but very few people can extract value from these transactions. And thirdly, but very importantly, banks have grown over the years, building an infrastructure to manage money that gets distributed through the supply chain. I think it's very important to start thinking through what's the infrastructure to manage data, not just to make finance better, but actually create greater value to the clients and see how we can be in the business of giving data to clients. Those would be sort of three key narratives from mine. Thank you.
Can I have that
Last
one
slide, yes.
I think to sort of close out, right, from our perspective is, it's very interesting. We ran a survey with some 300 executives globally, right? And it's interesting that essentially all corporates out there, somehow or the other, are touching digital trade. And everyone somehow, whether it's the blockchain, whether it's financial settlement, whether it's Internet of Things, big data, we've talked about the key themes where everyone's interested in. And that's a long ways from where we've come from, where we talked about supply chain finance being siloed in a small closed loop ecosystem, right? And so we imagine a world, right, if we can dream for a second, right? And I think everybody uses WhatsApp or Line or some sort of a social media platform out there. And we sort of imagine something similar along those lines, where at the end of the day, trade would be a single messaging platform where everyone is a single constituent and acts individually just like anyone else, and we all know who is the other side. So absolutely authenticity, integrity, transparency are the key themes for that. And once we have a single messaging platform, I think then that's when you can put on top new layers such as purchase orders, invoices, settlements that allowed at the end of the day reduces the risks of settlement, reduces the risk of complexity, governance, all that. If we can do all that, then I think we can turn around an LC transaction, what takes today, a month to complete with all the risk and paper that needs to get done in order to complete it. We can do that within seconds. I think we've seen already first examples on the payment side, where we've done ourselves investment into Ripple, which is this new blockchain initiative where we can settle essentially cross-border payments from what used to take days, now takes in seconds. So that's sort of a new platform or new way we are thinking forward for trade as well, where definitely trade has an opportunity now with new technology, with FinTech, with collaboration of banks. There's an opportunity here now for corporates to provide really real-time value-add trade solutions, which is going to be quite mind-blowing, I believe.
So, Kun Kanoksak, your view on the future of supply chain finance generally as well as especially in Thailand?
Sure. Slide, please. Right. I think as we talked, we talked about a lot of pain points, and we talked about opportunities, and we talked about technology and new players. So I think it's exciting time for this. Yeah? There are a lot to be gained, but it's a complex subject. So a lot of jigsaw puzzles need to be completed. And these are some of the items that we thought would be relevant. The first one is the value proposition for the customer. And I'm talking about the end-to-end supply chain here. Everyone has to benefit. It has to be easy for them. It has to follow the same standards so that people don't have to work with so many different standards or systems, and it needs to link with the APIs, the ERP, whatnot. Next is the pricing, and for this I include the cost of operating this as well. That the operating cost has to be low because we are talking about a lot high complexity here, and we can talk about bringing in the peer-to-peer lending, bringing in the liquidity, and talk about people having the fair share of the pricing. Next is the efficient processing, very important because we are talking about a lot of transactions. How do we match the number of invoices, where it is, what is the borrowing base? So it needs to all be automated, right? Next one is the risk management. Michael, you talked about that as well. So banks look at the underlying transactions. Is it approved billing? Where are the goods now? Are these genuine transactions? And with the new AI technology, we can even talk about what are the alternate lending models that we could make use of. Next one is onboarding, because we are talking about a lot of people involved in the chain. So onboarding need to be easy, need to be simple. So how do we do KYC? How do we get customer to implement the system, for example? And last, technology. It comes into play as an enabler. So blockchain technology, distributed ledger, these come in and it will help allow the other jigsaw pieces to be able to function as well. So all these are moving very fast on its own. A lot of players coming in. It's looking exciting. So for the SME operators, look out, be open, and be open to these new technology so that you can look to adopt it when it becomes ready, because it will come.
I think that sums up very nicely our discussions today. Thank you very much for your valuable insights, all of the panelists. Ladies and gentlemen, please give it a big of applause to our panelists today. Thank you very much.